Caithfirle, for more than a year now, households have been dealing with high inflation and they've been dealing with the impact of rising prices. And for mortgage holders, a new front has opened up in the cost of living crisis, with mortgage costs have spiralled for tens of thousands of homeowners right across the state. And since July of last year, the European Central Bank has increased its main lending rate 6 times, increasing it by 3.5 percentage points. And the ECB will meet again next Thursday, and it is likely that they will increase the rate once more. Retail banks have been slow to increase their fixed and variable rates, although it is expected that rates increases will follow in the near future. However, tens of thousands of households have felt the full brunt of interest rate hikes. They have received letter after letter in the post, each one informing them of another interest rate hike, of a higher mortgage repayment, more pressure, more anxiety, more distress for these families. And the more than 250,000 households on a tracker rate have faced immediate hikes in their interest rate and immediate reductions in their disposable income. Then there are those whose mortgages were sold at discount to vulture funds. They were told by the Taoiseach that they would be no worse off once their mortgages were sold on to the vultures. But Sinn Féin repeatedly warned that the sale of mortgages to vulture funds would leave workers and families at the mercy of these funds and exposed to higher interest rates, and that is precisely what has come to pass. There are more than 80,000 households, 80,000 borrowers with mortgages held by non-bank and vulture funds who are on variable interest rates. They are now being hit by spiralling rates, with some being charged as high as 8%. Their mortgage payments have increased by hundreds of euro per month and thousands of euro per year. So for a worker, for a family, the monthly mortgage payment is no different from an energy bill or the weekly food shop. It is an essential outgoing that cannot be avoided without dire consequences, such as arrear, increased debt, financial insecurity and anxiety. And I want to outline the real impact of rising mortgage costs that they are having on families and on workers. A mortgage borrower contacted me whose mortgage was sold to Pepper. Her interest rate has increased from 4.5% to 8%, and her mortgage repayments have increased by €300 per month or €3,500 per year. So, with the income shock that this has caused, she is terrified of having to cut back her payments or to fall into arrears. Another mortgage borrower whose mortgage was sold by Permanent TSB to a vulture fund has contacted me, and she has seen her mortgage repayments increase by €523 per month. That's over €6,000 per year. And this is the context in which we need to debate this motion from Sinn Féin tonight. In the past several months, we have seen the state roll out schemes to support businesses, including large corporations, with their energy costs. We have seen the state roll out schemes, their design imperfect, but the objective often justified. And the question we must ask now tonight, as we debate this motion, as borrowers are facing spiralling mortgage payment, is whether we should stand back and do nothing, or whether we are to be proactive and do something. And so many have said in recent times, we cannot let the perfect be the enemy of the good. So it is clear to me and is clear to Sinn Féin that households facing spiralling mortgage costs in the midst of a cost of living crisis need support. And that's what this motion calls for. It calls for the introduction of a mortgage interest support scheme, targeted and temporary relief to assist struggling households with rising interest costs. And that should be done by introducing a scheme that absorbs a portion, 30%, of increased interest costs compared to June of 2022, before interest rates began to rise. And it should be capped at a maximum benefit of €1,500 per household that qualifies over the course of the scheme. This would only apply to the primary dwelling homes and exclude second and rental properties. And it would be temporary, in place between now and the end of the year, 8 months. To give an example of how this would work, so for a household that has seen their mortgage costs rise by €400 since June of 2022, this scheme would provide relief of €120 per month, or between now and the end of the year, €960 over the scheme's operation. So it wouldn't insulate households from the full impact of rising interest rates, but it would provide some relief. It would take the sharp edge off this shock. And this isn't the blanket relief as existed before, the relief that the Minister for Finance, Michael McGrath, championed in 2018 and which the Taoiseach called to be increased in 2015. This relief that we're talking about is temporary. It's targeted, providing much-needed support to households at the sharpest edge of rising rates and struggling home buyers. As I said many times before, we cannot let the perfect be the enemy of the good. We are proposing an allocation of €400 million should be made towards the scheme. And this takes into account standard variable rates potentially increasing by 2%, fixed rates increasing by 3% and tracker rates increasing further in the time ahead, and all with immediate effect on mortgage loans provided by retail banks. We've also engaged with the Parliamentary Budget Office regarding the costs associated with these scenarios, and it should be noted that in this period, AIB, for example, has increased standard variable rates by 0.35%, so the assumptions are very, very high. It also assumes the maximum relief is applied to all standard, variable and tracker rate mortgages held by non-banks and vulture funds, an overestimation, again, that is unlikely to materialise, but for the purpose of costings assumptions that are made. Reasonable assumptions, in my view. And it is sensible, Chairperson, and it is a necessary proposal. This proposal to bring forward mortgage interest relief is one that can be delivered and one that can provide meaningful support to support households at the sharp edge of the interest rate hikes and stave off the risk of rising arrears. So I am calling on all deputies in the Dáil to stand by those who have mortgages to reintroduce targeted, tailored, time-bound mortgage interest relief and to support this motion.
Deputy Louise O'Reilly.
Minister, figures produced by the CSO recently show that in real terms wages have fallen by 3.3% because they're not keeping pace with inflation. And what that means for people who are facing a hike in their monthly mortgage repayments, people who would benefit from the Sinn Féin proposal that we're debating this evening, it means that at the moment they're getting squeezed on all sides. They're paying more for goods and services, more for their shopping every week, more for their gas, electricity and every other bill. Something has to give. People who are working hard to pay their bills are finding that week on week, month on month, their wages cannot stretch to meet the growing demands on their pay packet, which is already falling well behind inflation. The mortgage interest support scheme that Deputy Doherty has proposed will be targeted, time-bound and give support to those who are struggling to pay their mortgage and who are very fearful of the hikes that are to come. And Minister, you will have heard about people from the St Vincent de Paul when they say, well, there might be a car in the front garden, or they might have, people may not have the outward appearance of struggling, but they really are. And I want to talk to you about a woman. I'm not going to name her, I'm not going to identify her too much because I know she's absolutely mortified, but she is mother to one of the over 1,000 kids in my constituency who are waiting on services from the CDNT. In fact, the HSE at a recent meeting, I think, said that we are among the longest waiters and have the longest lists. So she buys services for her daughter privately. Her daughter has autism. She buys those services privately. But every time her mortgage goes up, she has to cut back on the services for her child. Now, you don't seem minded to put enough effort into supporting the child, but perhaps you might be minded to put a bit of effort into supporting her parents who are subsidising the state with their own wages.
Deputy Martin Kinney.
Minister, rising interest rates, real mortgage interest rates, are putting homeowners at risk and it's under severe financial pressure across the country. Particularly, they continued in the context of last week and what happened when we seen the government announcing that there was possibly 10 billion this year and possibly up to 16 billion next year in additional surplus across the state. And, you know, I think in the context of that, it's completely ridiculous that the government is in a situation where they are not supporting homeowners who are under such stress. We know that mortgage interest repayments are rising at colossal amounts, thousands of euros per year in some cases. Some people are paying up to 8%, particularly those who are in the clutches such as the vulture funds and some of these other agencies that are out there that have bought up loans at very low percentages and are now pushed them through the roof on people. Our proposal here is that it will be based on the interest rate which was charged in June of 2022, and that we will look at 30% of the additional interest being taken away so that people could have a bit of a break in respect of that, and capping that at €1,500 per annum, so that, as was in the past, that it was open-ended. That's not what we're talking about here. We're talking about something which would be controlled and which would be in place to support people throughout all of these difficulties. Rising mortgage interest rates are putting the possibility of people buying a home beyond the reach of so many people out there, and generations aspiring to be for first-time buyers, they're just really finding it very, very difficult. And we had recent government's announcements of putting in place some grant aid to assist people to regenerate old properties that are out there. People can't get a mortgage to buy those properties in the first place, and if they do get a mortgage to buy them, the interest rates are through the roof. So there needs to be an assessment of all of this and a look at how we can actually support people. Sinn Féin has repeatedly called for the introduction of a temporary mortgage interest relief, and we need to have that in place to support mortgage holders. We need to have a limit on it, and we need to ensure that it's in place as quickly as possible. So, Minister, it's time for you to turn back on what you have set your face against for so long and recognise that in the context of the very large budget surplus that you're going to have, that there needs to be something in place to protect and to assist mortgage holders out there who are under such huge pressure. And we need to do that now. Now is the time to act to ensure that we can save people from the huge distress that so many people are in across every constituency in the country.
Deputy Pat Daly.
The need for this motion to pass and for the mortgage interest relief to be granted is clear across County Kerry. Evictions, repossessions and mortgage arrears are all on the rise, as they are across the state. County Kerry has a very high level of relative deprivation. Employment is often seasonal, part-time and low paid. Homeowners in the county are therefore particularly susceptible to interest rate rises and rising household costs more generally. The recent revelation, and this is not a joke, that exactly one affordable home was built in the county last year is a damning indictment of how the county is being served by the government's housing policy and by the government in general. Housing lists are long, up to 14 years. Affordable homes are few and far between, and the cost of the living crisis is forcing those with mortgages and a home into even greater precariousness. The main reason for this cost of living crisis is, of course, rising energy prices. Whether paying for energy directly or goods that are subject to higher energy costs, workers and families are being squeezed. And in this context, I want to outline some facts from the recent Household Energy Price Index study commissioned by the Austrian and Hungarian energy regulator. The study found that Ireland was the most expensive of 33 countries surveyed. That included the EU, UK and Ukraine. Financial supports per capita for households to help cope with the price rises are lower here than in other European countries. And after this current month's credit is applied, no further supports are in the offing. The survey also found that residential gas prices in Ireland were the 8th most expensive of 28 countries studied. The cost of electricity has doubled for Irish households in the last 2 years. The Household Energy Price Index calculates that the supports per capita in Ireland at 1,071 since September of 2021. Ireland was well above the unit price of 28.3 at a staggering 49.9 cent, nearly double. Most disgracefully, a sharp drop in wholesale costs has not resulted in any drop in consumer prices. Recent Central Statistics Office data shows wholesale prices went down by more than 50% in the year to last month. So, Minister, households are at breaking point and they need whatever assistance they can get. Mortgage interest relief is just one part of the picture, but it's an important measure nonetheless.
Deputy McCarthy.
It's actually hard to fathom that since July of just last year, we have seen 6 increases in ECB interest borrowing rates from a position of 0% to a position of 3.5%. And knowing, as we all do, that that represents hundreds, if not in some instances thousands of euros of additional pressures on already hard-pressed families and workers, it is hard to fathom that government haven't done a single thing to support those people. In fact, the increases in mortgage payments for many families actually counter and way beyond counter any supports that they have received in other cost of living measures. And now we're told that another increase is coming down the line, and government again tell us that they plan to do nothing to support those families who will be very much under struggling as a result of that. We know the people who suffered most as a result of these hikes. There were those people who suffered as a result of the last time Fianna Fáil were in government, whose loans were sold to the vultures. They are being absolutely crucified by the vultures that were welcomed into this country by the parties that are now in government. But there's also another time bomb that's ready to explode, and that's those thousands of families who are currently on fixed rate and whose fixed rate periods are coming to an end. They are going to see an astronomical increase in their payments, and therefore it is imperative that Pearse Doherty's motion before this Dáil is actually passed and implemented, because the outworkings of the alternative just don't bear thinking about. On a week where government have announced €1 billion in subsidies to developers, what we are putting forward is a proposition that will cost €400 million at the most to support those people who are at the coalface. Because the alternative to you doing something, Minister, is that you will be pushing families, workers, those people who are lucky enough to have their own home at present, you will be putting them into financial distress. And it would be the irony of ironies, I have to say, when we spend so much time in this House talking about those people as a result of your policies who aren't able to have their own home, if we're matching that with those people who are lucky enough to have a roof over their head that they can call their own now, if that is put under threat because of the financial distress that will be caused if we don't actually implement the measures that we're calling here for, a time-bound, limited measure that will give some assistance to those people who have been suffering so much as a result of rising interest rates.
Minister, mortgage holders across the country are seriously struggling at the moment. I've received many complaints, as I'm sure others have as well, from mortgage holders in East Offaly. Households are paying interest rates of 7 and up to 8%, with repayments rising by thousands of euros per year. And this is all happening at the same time as the banks are making huge and record profits, but offering only 0% interest on deposits. Banks are not passing on any share of their profits to ordinary people and to mortgage holders, and what they're doing instead is increasing interest rates on mortgages to breaking point. We're in the middle of a cost of living crisis. We don't need reminding of this, but I will say it, with sharp increases in the cost of energy, transport, food and so on. And it's in this context that we're putting forward a very modest measure. What Sinn Féin is calling for is a targeted temporary interest mortgage relief scheme. We had mortgage interest relief in the past, open-ended. Indeed, you called for it to be reintroduced. What we're calling for here is a modest measure for a scheme to support struggling householders by financially covering 30% of the additional interest paid per month up to a limit of €1,500. And for a mortgage holder with an outstanding balance of €200,000 on a 20 years left, which would be typical in a county like Laois Offaly, they have seen their interest rates go from 2%, 2.5% to 5.5% and 6%. They've seen a 3.5% jump. And they will now be paying €400, an extra €400 per month. The scheme that we're proposing would see some relief for them and would mean €120 extra in their pockets, or €960 in total in the current year. This would not apply to second homes, holiday homes or rental properties. It would therefore only apply to the family home. It would therefore be most beneficial for those in the family home, workers and families on low and middle incomes, because it's set at a limit, whereas previously that wasn't the case. We developed these proposals in consultation with the Parliamentary Budget Office, and based on that analysis, it would cost a maximum of €400 million. And to conclude, this measure is sensible, Minister. It's affordable and can be funded by a portion of the state's projected surplus this year of €10 billion plus. Families need real support, not empty words. We're often asked for solutions. We constantly point them out. I would ask you to take this one on board. We have a financial surplus. We have the money. We're asking you to use a very small part of this to help ordinary people, especially hard-working mortgage holders who need relief at this difficult time.
Thank you.
I want to commend my Sinn Féin colleagues on this particular motion. We've seen from previous financial crashes, COVID, the war in Ukraine and the current cost of living crisis that we live in a very volatile economic system, and that is it's shifting and changing, and it's not always for the better. Since July, we've seen the European Central Bank increase its key lending rate 6 times. Many struggle to get their head around the impact of these announcements and how it may impact their repayments. These interest rate hikes are having a crippling effect on thousands of families. So while this government, you Minister, are sanctioning €1 billion in savings to developers, you won't help struggling mortgage holders. These hikes are costing families over thousands over the course of a year. Ireland's mortgage rates are already much higher than the European average. Homeowners that had their mortgages sold off to vulture funds are among those most at risk. They have seen some of their rates going up as high as to 7.5%. And those homeowners have been abandoned by Fianna Fáil, Fine Gael and the Greens and left at the mercy of the vulture funds. As a result of all these hikes in interest rate, homeowners are now under severe financial pressure and deeply worried at what lies ahead. The fear of losing their home is a tragic possibility for many, and at this time when government are forecasting a surplus of more than 10 billion this year, why are government not standing on the side of homeowners? We've never been a wealthier country. We've never had so much money, and yet so many have so little, and people are suffering and having to put up with government inflicting, supporting developers, supporting vulture funds, and yet giving no relief to hard-working mortgage holders. Why are the government not giving homeowners the break so many are calling out for and so many need? The sharp rise in interest rates are not just having a harsh impact on mortgage holders. The increases in interest rates are pushing the possibility of buying a home further and further away from first-time buyers. They are being left pay sky-high rents as their government fails to deliver affordable housing. We in Sinn Féin have repeatedly called for the introduction of temporary mortgage relief. A proposal would see homeowners who are struggling with their mortgage get support with relief of up to €1,500.
The cost of living crisis has been a dominant part of people's lives since the end of 2021. In particular, the significant increases in fuel prices, in the cost of food and groceries, in the cost of heating and energy, and with exorbitant rents have all greatly impacted on those least able to shoulder the burden of these runaway costs. The high cost of this crisis for the country is that it has driven many out of the country to take up better employment and educational opportunities that are not available in Ireland, where they will have a better quality of life, a chance of home ownership and a lower cost of living. The most urgent needs for people are for housing and quality health care, and they are not getting either here. Substantial amounts of an individual's income are also going towards the cost of childcare, education and transport. There is too much uncertainty and instability in people's lives, and people are fearful about their future. Those who have been fortunate enough to own their own home are now finding that rising mortgage rates are putting them under severe financial pressure. The repeated increases in the main lending rate since last July by the European Central Bank has resulted in mortgage repayments that for some are exorbitant amounts. Typical tracker interest rates have gone from 1.15% in June last year to 4.65% on average. So those with tracker mortgages are particularly feeling the brunt of these interest rates rises. Those on tracker mortgages now face repayments on a typical tracker of up to €1,650 over a full year. These interest rate rises will also impact on first-time home buyers who will find it more difficult to buy a home. People in such a position are at great risk of falling into arrears. There is also a possibility that in long term they may lose their house or apartment. These interest rates rises have proved to be very challenging for homeowners, and this is why Sinn Féin have called for the introduction of a targeted and temporary mortgage interest relief that will be limited to 8 months and will be subject to strict criteria that it would apply only to the principal dwelling homes and to new and existing mortgage agreements. It's time to give homeowners a break, and this measure will go some way to alleviate the acute financial distress that these rising interests are causing homeowners.
On all the evidence, the government is indifferent to the suffering of people in this housing disaster, indifferent to the suffering and the panic that people who are facing eviction and having nowhere to go. You're indifferent to the suffering, a series of increases in their mortgage repayments, leaving them completely broke and broken, many for the first time in the lifetime of their home loan. Your supporters, the usual free marketeers, don't have to worry from the security of their plush homes, handy inheritances and well-pensioned jobs. But there is a heck of a lot of people in North Kildare contacting me now to tell me they're squeezed dry, rate rise after rate rise. They're shocked to a man and a woman, and they are frightened. There are people who would have been previously comfortable, been able to afford a takeaway on a Friday night, a holiday during the summer, weekends away, no problems with trips or hobbies for their kids, living the life that ordinary working people really should be expected to be able to live. And now suddenly at the end of the month they have nothing. Many, and a noticeable amount, I had another one in with me yesterday who's having trouble with his mortgage repayments, say to me that they had never contacted Sinn Féin before, but they now realise we are the only party listening to them, understanding their fear and the uncertainty that they're experiencing. Suddenly a doctor's visit, even a note home from school about a trip or an outing, is a major financial problem. There is a coarseness and there is an ignorance, a sense of dog eat dog from entered financial and fiscal politics and society, and the people in it are really suffering. Our mortgage interest relief proposal will support people where they are, suffering in this deep crisis of the cost of living. People are battered by a series of rate hikes in their mortgage for their ordinary house. That would be their primary dwelling, you might call it. They call it their home, which means the world to them because it's the home for them and their children. It's where they have their life as a family, where they can close the doors and feel safe. Despite the Be Kind hashtags, there is zero kindness in this government to people who are struggling with housing, be it eviction or the increasing mortgage payments. There is zero kindness and zero concern, and this government is indifference should be a red flag to the people who voted for you. You like to pretend that you're the party of home ownership. Don't make me laugh.
Minister, I met a woman recently who was canvassing in Huntstown in my constituency, and to say that she was extremely worried about the never-ending increase in her mortgage and was becoming more and more concerned that there's most likely going to be more increases in interest rates in the coming months is an understatement. As has been stated, the Central Bank has increased its key lending interest rates an incredible 6 times. In real-life terms, this means 250,000 people on tracker mortgages who have been on the sharp end of those increases in interest rates. And the most vulnerable amongst those people have been caught up in this nightmare situation are those who have loans held by the vulture groups, vulture funds and non-bank groups. It's estimated that in the region of 43,000 people. That's a phenomenal number of people who have no power or no belief that those who own their loans care about them. It's all about maximising profit. For many people, it's the difference between paying the mortgage, paying for food, paying the massive gas or electricity bills, and the luxuries have been long stripped out of their budget. There are all sorts of talk about the budget surplus. I've heard you on the radio, billions washing around the coffers of the Minister. I've heard you talking about rainy days and how we need to put money away for the future, and I agree, we need to do all of that. However, we also need to ensure that people are looked after in the here and now, that we support as many people through this very difficult time as we possibly can. As has been mentioned, Sinn Féin are proposing a temporary and targeted mortgage interest relief for a period of 8 months that would give upwards of €1,500 benefit to a household. And I'd like to appeal to you, Minister, at this late stage, despite your amendment to the Sinn Féin motion, to reconsider your position on the issue of supports to those who are faced with massive increases in their mortgages.
Look, we all know people who have had to cut corners to pay their bills and to keep food on the table, to ensure that their children are properly dressed and fed throughout the cost of living crisis, Minister. Among those households are those with mortgages. They have seen their mortgage repayments soaring by thousands of euro a year because the European Central Bank responds to inflation, which is to raise interest rates. This has happened 6 times between July of last year and March 2023, increasing its interest rate from 0 to 3.5%. Over 250,000 tracker mortgage customers have seen immediate sudden increases in the cost of their mortgages. But for the 43,000 variable rate mortgage holders whose loans are held by non-banks and vulture funds, the situation can even be worse, with some witnessing a surge in their interest rates of up to 8%. And I am aware of people who are genuinely fearful of how long this will be able to shoulder this burden for. The Money Advice and Budgeting Service, MABS, have summed it up saying the interest rate hikes serve as a particularly alarming trend during the cost of living crisis and are having disastrous effects. This has been proven by the constituents who have contacted me and others here in this House, and even yourselves, desperate for help in meeting their repayments while also meeting other obligations. And what about first-time buyers? Many have and many more are likely to face significant higher mortgage repayments in the time ahead. The pressure on these families is immense. Is this government going to wait until their home is something they have no longer able to afford? With state expected to run a surplus of more than 10 billion this year, is the government seriously going to continue with its policy of delay and inaction, or is it going to intervene for the benefit of our citizens? Unfortunately, it seems as though the government is willing to allow people to struggle with not Sinn Féin. We are proposing temporary and targeted mortgage interest relief until the end of this year. This would involve absorbing 30% of the increased interest costs facing mortgage borrowers and would be based on the interest rate charged in June 2022, capped at a maximum relief of €1,500. We fully costed this measure and would allocate 400 million towards it. And we factored in a high bar in future increases, which more than likely result in the cost of the scheme being less than we are providing for. We cannot allow people to be left to fend for themselves amidst these troubling times, and we are asking the Minister and urging it to act. Gormagot, Laskin Corla.
I mean, we're calling for the introduction of a time-limited mortgage interest relief for homeowners hit by interest rate increases. And I think it's a sensible, affordable and necessary measure aimed at supporting homeowners facing significant increases in their mortgage costs, and they are significant. I mean, one of my constituents, she's a young woman, self-employed. Her husband, who was working up to a year ago, suffered a stroke at the age of 37. He's now on illness benefit. They have 2 children, one with additional needs, whom they're paying privately to get extra support for. Their mortgage has gone from €1,198 to €1,559. It's almost €400 increased in the month. She sought assistance, but there are none for people who are struggling to pay their mortgage. There's assistance for those in arrears, but none for those who are paying the mortgage with difficulty. She has looked at other issues about trying to restructure the mortgage as she's reached out to other mortgage providers. Hopefully something will break for her. But she's not the only one. There are others whose mortgage has increased by hundreds in the month, on top of the increase in food, in fuel and electricity. We're going to add to our homeless figures because we're going to see homeowners lose their home because of an inability to actually pay their mortgage. One woman whose mortgage practically doubled is seriously considering selling, but I don't know where she's going to go after that because there's nowhere to rent. She just cannot put up with the stress of trying to make ends meet. Something has to be done to assist households such as these. They're at breaking point. There's no rational or reasonable argument that we do not have the ability to do this. I mean, the general government surplus in excess of 10 billion this year is forecast in the most recent Stability Programme update. And earlier I listened to Minister McGrath picking holes in the wording of the motion. We need action here. We need the government to do the right thing to help these struggling owners. They need action rather than just words, and it's not a political issue. It should not be a political issue. It shouldn't be about who's doing the right thing or who's doing the wrong thing. Do the right thing by the homeowners, or they will lose their homes.
Thank you, Minister. I'll address a number of points that have been raised in the course of the debate by you and Mr McGrath, and several points were raised in regard to equity. Now, I understand these concerns, and that is exactly why the scheme we are proposing is temporary and it's targeted, in that it provides a relief on the increased interest costs mortgage holders faced as a result of rate hikes since June 2022. To ensure that those at the sharpest edge of the interest rate hikes are supported most, This is not a blanket relief as existed before. Now, that was the relief that Minister McGrath championed as recently as 2018. The relief that Taoiseach called to be increased back in 2015. The proposal we are putting forward is not a reintroduction of the old scheme. It's more targeted and it's temporary. It would be effective in supporting households that face spiralling interest rates in the context of a cost of living and aspiring home buyers struggling to get their foot on the property ladder. So there was many mistakes in what Minister McGrath put forward in his contribution. As has been said many times before, we cannot let perfect be the enemy of the good. With regards to the cost, we believe an allocation of €400 million should be made towards the scheme. Now, Minister McGrath said they had costed at 600 million for the full year, and that may be the case, but 400 million we're asking to be extended until the end of this year. This is on the basis of a number of reasonable assumptions, including the standard variable rates increasing by 2%, fixed rates increased by 3%, and tracker rates increasing further in the time ahead on mortgage loans provided by the retail banks. It should be noted that in this period, only AIB has increased variable rate by 0.35%. It also assumes the maximum relief is applied to all standard variable and tracker rate mortgages held by non-banks and vulture funds, an overestimation that is unlikely to materialise. These are reasonable assumptions, just as when the government makes assumptions whenever it introduces a scheme. I would remind the deputies that the temporary business energy support scheme was introduced with an allocation of €1.25 billion at a time when no one knew if and how much energy prices would continue to rise. If the maximum value of claims had been made under the scheme, it would have cost the state €24 billion. The government did not make that allocation, basing their allocation on what they described as reasonable and appropriate assumption. That's fair enough and precisely what we have done. This government cannot stand idly by as people are being hit by increase after increase in their mortgage costs in the midst of a cost of living crisis. More than 43,000 variable mortgage borrowers with loans held by non-banks and vulture funds have seen significant hikes in their mortgage repayments, with many seeing interest rates rise as high as 8%. Paying a mortgage on 8% is impossible. A family in Mayo I've been in contact with have seen their monthly mortgage repayments go up by 30%. The mother said these increases are not sustainable for us, with the high cost of living and food costs increasing weekly. I now have to go back to work full-time, which means facing high childcare costs. My husband has a good job, but we have nothing left to live on. Workers cannot be told that they need to suffer inflation twice. First, they are hit with the spiralling cost of living, then they are told that the only solution is the higher mortgage payments. The cure to energy prices, higher food prices, they are all told is an increase to their mortgage costs. The government have a responsibility to protect its citizens. The only way to do that is the necessary time frame to introduce the mortgage relief. It needs to be targeted to those that really need it, and it needs to be time limited. This is a sensible and necessary measure. The government must put aside party politics and work with Sinn Féin to bring these supports in. And what surprises me, Minister, is there's so much kudos given to the Central Bank and what the Central Bank is saying in this situation. Yet there's been many housing schemes where the Central Bank, the ESRI and economists and many other bodies and taxation advisors and all that have said that a lot of these schemes, the schemes that you've introduced heretofore, they don't recommend them, and they said that they were causing inflation to rise all of the time and putting house prices beyond the reach of ordinary people. So to say that we cannot do this very temporary and targeted measure because the Central Bank doesn't advise it to do, and God knows, we've said in this as well that the Central Bank is going to encourage banks to act in the right way. You and I know, both from being on the Finance Committee and other places, that you cannot rely on the banks to do the right thing.